Welcome back. You're watching the newsroom on ET now. Well, let's welcome on board now the management of Dixon Tech. So much to talk about with them, not just their third quarter numbers, but all the interesting announcements as well from the budget. Saurabh Gupta, the CFO, joins us now on the show. Thank you so much, Mr. Gupta, for joining in. So, let's start with the numbers. Strong, broad-based growth seen during the quarter. Do you see this continuing in FY22 or perhaps even higher growth, on account of the PLI scheme coming into full application?
Basically, we have delivered very good results in Q3. In fact, this is our highest ever revenues and profitability that we have delivered in our operating history. And we see this momentum continuing in Q4 as well. And the forecast for the next fiscal year is also very strong. So we continue to have a very healthy order book, and we continue to add customers across all our verticals, and we'll continue to get higher share of wallet from our existing customers. So yeah, we are looking for a big FY21-22.
So we saw good growth on the top line and bottom line. The margins were a bit of a miss due to the higher raw material costs. So what sort of inflation are you seeing then? If you could give us a rough guide on where we could see your margins trend going forward?
Yeah, you're absolutely right. Our gross margins and EBITDA margins have contracted year on year and also sequentially quarter on quarter. That is because of two reasons. One, because of the change in sales mix. So larger part of the business is now coming through LED TVs, which is slightly at a lower margin as compared to our other verticals, since it is on a prescriptive mode. So if you look at this quarter numbers, almost 60% of my revenues have come from LED TVs. So that is one of the reasons. And secondly, you are absolutely right. We are facing some headwinds as far as the commodity costs are concerned and the sea freights are concerned. So that puts a pressure on margins, especially in our ODM business. However, what we are doing, we have been able to pass that on through some calibrated price increases in some categories. In some categories, we'll be able to pass it on gradually. But that's the way the margins should reflect even next year as well, because a significant portion of our revenues will start coming from consumer electronics and mobiles as a category. So the margins will hover around this particular range of 4.5, 4.6%.
What's the current market share in LED TV? What's your order book and the growth opportunities you see in this segment?
Yeah, so this quarter it was around 60% odd, but next year I think so a significant portion of our revenues will start coming from mobiles as a category. So as a percentage, though in absolute terms, LED TVs will grow next year as well, as we have a very healthy order book and we have added more customers there. But as a percentage of revenues, it will come down from from the current 60% odd. And we continue to have very healthy order book here. And next year, we're looking for a 70 to 75% growth in revenues as compared to this financial year.
All right. Mr. Gupta, Dixon is expecting 40% revenues from mobiles in the next couple of years. You've got new deal wins as well. So could we expect an upward revision in this revenue growth guidance for mobiles?
Yeah. So we have recently closed agreements with two global brands. One is Motorola and one is Nokia. And we are also in advanced discussions with some of the other global brands. We think we'll be able to clock almost 4,500 crore kind of revenues from these customers. So that is the kind of visibility that the customers have given us. And there should be a significant growth in mobile revenues next year. So as a vertical, the mobile revenues should start contributing almost 30-35% of my overall revenues from next year. And consumer electronics, as I mentioned, will again have a 15 to 20% growth next year, as the order book looks quite strong. And there, the capacities that they have increased now or will be increasing by Q2 of next fiscal would be around 5.5 million, which will actually take care of almost 40% of India's requirement. Plus, we are also deepening the level of backward integration in TVs. So that should also help us improve our margins.
Okay, so you mentioned that Motorola will mainly be exports. What will be the global share you're expecting there?
Yeah, so there will be some ramp-up stabilization phase. We understand that Motorola sells almost 40 million units globally, and they have manufacturing units all across the world. I think so. In next couple of years, we feel absolutely confident that we should be able to cater 10 to 15% of the requirements.
What will be the impact of the custom duty hike according to you, and which was announced in the budget? How will it impact a player like you?
Yeah, so duties have been increased on certain parts of mobiles and on chargers as well. So in short term, yes, the prices go up. But in the long term, it is good for the country, good for the industry, because it deepens the level of manufacturing in India. It results in more value addition. And that's the main objective of the government is to increase the value addition in the country. As far as our business is concerned, mobile business is on the prescriptive side. So any increase in prices due to duty increases is completely passed on to the customers. So there is no impact on margins.
Mr. Gupta, thank you so much for joining us today on ET Now to talk to us about your numbers and the budget.